In this lecture, we are going to explore the first advanced technique derived from the combination of simple divergence with fractal analysis through the gate of multitimeframe analysis. If we take the concept of fractal pattern that we studied in the last lecture, and apply it to the idea of simple divergence, we will arrive at an interesting idea. Since a fractal is a pattern that repeats inside itself, a fractal divergence is a simple divergence that happens within another simple divergence. The other conclusion is that this idea can happen in multiple degrees, so we can have maybe 3 or 4 simple divergences happening within one another, which increases the level of accuracy of our entry and exit points in the market. To be able to see this happening in a chart, we need to define the notion of divergent price territory, which is what will enable us to look for smaller divergences in smaller fractals. Divergent price territory is when raw price action and momentum are out of sync. For example, when price makes a higher high, and the relative strength index fails to make a higher high, we enter in price divergent territory in an upward movement. The opposite is true for a downward movement, of course. At this point, we can go to a lower timeframe to find another simple divergence happening within the already divergent price territory. When we find a simple reversal divergence happening inside another divergence, we call this pattern a second-degree fractal reversal divergence. When we find 3 simple reversal divergences happening within one another, we call this pattern a third-degree fractal reversal divergence. Let's conceptualize the fractal reversal divergence to solidify our understanding of the idea. To identify a fractal reversal divergence in at least 2 fractals, first we need to observe a simple reversal divergence happening in real time. Once we identify that, we draw a rectangle to point out the divergent price territory for the lower timeframes. After that, we jump down to the next lower timeframe and wait for another simple reversal divergence to occur inside the divergent price territory outlined in the higher timeframe. That's the basic framework of a fractal reversal divergence. If you wish to identify fractal divergences with higher degrees, all you need to do is to repeat the same steps again. A third-degree fractal divergence would happen when you were able to see a simple reversal divergence within a divergent price territory, and this divergent price territory would be inside yet another divergent price territory. If you study this idea in your price charts, you will notice that fractal reversal divergence is capable of pointing out extremely precise points of reversal in major and minor fractals in the market. However, now that we already know the strengths of the concept, let's explore its weakness. The fractal divergence concept is a good idea, but let's not forget that it still comes from a simple technical indicator. For example, if you decide to use the fractal divergence concept by itself, which is a bad idea, you will notice that sometimes price appears to be in a reversal point in a textbook example of fractal divergence, only to find out that price will mislead you, and continue in its original direction for a few more vectors. This is precisely the reason we studied the contextual trading principle. In other words, you cannot trust the fractal divergence idea by itself. It is merely a precision tool that needs to be used in the right time. However, we have an operational logic guideline that helps traders in these situations. Often when you see a floating fractal divergence without any other techniques pointing to the same area, you can assume that price is playing a subtle sleight of hand, because you will often find fractal reversal divergences happening in a lower fractal that agree with the overall trend. Remember that it is always much easier to trade in the direction of the trend. The right time to use the fractal divergence will be defined by the context of the trade. For example, if you happen to see a fractal divergence in the same price level where major support resistance lines are agreeing with the analysis as well as the raw price action reading, you can think about forming a trade idea if the potential risk parameters of the trade agree with the concept of long-term sustainability, which we will explore in later lectures. In the next lecture, we are going to explore the fractal hybrid divergence idea.